So what is a credit union? When you look at them from afar, banks and credit unions appear to be identical. Looking closely, you'll find that credit unions are not-for-profit financial institutions that offer most products and services that you will also find in banks. You can open a standard saving and checking account, get a certificate of deposit, or invest in a money market account in a credit union. They can also grant a mortgage or home equity loans, personal loans, and even auto loans to qualified borrowers. But what are the main differences that differ credit unions from banks? Ownership is the main difference. Members own the credit union. This is why in a credit union, the staff refer to their customers as members and not merely clients. For banks, it is investors that own them. They are not necessarily account holders or members of the community where the bank is located. When you have an account at a credit union, it doesn't matter how big or how small. You automatically become a partial owner of the institution. That being the case, all members can participate in voting for credit union leadership, which is the board of directors. Other than that, there are a couple of differences between banks and credit unions. Taxation is another difference compared to bank. Because of its nature as a non-profit organization, credit unions do not pay the same taxes that banks do. In terms of size and geographics, credit unions cannot be as competitive as banks in terms of the financial services that they offer because of their limited income and geographic presence. The eligibility requirements is also different. While you may find it easy to just walk into a bank and open an account, that is not always the case with a credit union. To keep their tax-favored status, the law requires credit unions to limit their customer base to a group of people who all share a common distinction. The law calls this the field of membership. Safety will often come up as an issue when people choose between a bank and a credit union. Many people are not aware that most credit unions carry a federal insurance, the backing of the NCUSIF and the U.S. government. Banks rely on the FDIC, which is another government agency, for their deposit insurance. Also, don't expect credit unions to be abreast with the latest technology in banking. The big banks have deeper pockets, so they have the luxury to invest in cutting-edge technology as fast as they come. Credit unions can't always do that. The people who originally came up with the idea for a credit union designed it to be a cooperative financial institution for people with a common bond. Members of a credit union would have a common denominator. They may be working for the same company, attended the same college, served in a branch of the armed forces, belong to the same church, or residents of the same community. This business model has gained popularity over the years. According to the Washington Post, 100 million Americans are bona fide members of a credit union. Collectively, credit unions have more than $615 billion in deposit liabilities. Around the world, you can find more than 46,000 credit unions boasting of more than 172 million members. Credit unions aim to encourage members primarily to save money through the products and services that they offer. They also help their members to achieve their personal goals by offering them loans. In fact, credit unions are popular because they provide access to loans to ordinary people. Members also benefit from lower loan rates and higher dividends on savings because credit unions are non-profit cooperatives. So instead of paying profits to stockholders, credit unions return the earnings to their members through improved services or dividends. Like banks, the actual products and services you can find in a credit union will vary from one credit union to the next. There are large credit unions that carry a broader variety of products, while some smaller credit unions will just keep their offerings to a minimum. But don't let the term small deceive you. Some of these so-called small credit unions can synergize with other organizations to address your demands. Contact your local credit union to inquire about services, charges, and technology options like apps, as you decide on them as an alternative to banks. Here are some of the basic products of credit unions. Most of them are similar to what banks offer. Savings accounts and ATM cards, checking accounts, money market and IRA accounts, credit cards, secured or unsecured personal loans, mortgages and home equity loans, auto and recreational vehicle loans, traveler's checks, money orders, certified checks, and foreign exchange. That's it for now. On our website, you can find more posts, as well as calculators and other financial tools. Have an experience with credit unions? We would love to know your thoughts, so feel free to share them with us in the comments below. I hope you enjoyed it, and don't forget to subscribe to our channel on YouTube to get more free financial educative videos.